Okay, hello everyone and welcome to the webinar. Hope everyone can hear me okay. If not, you might try refreshing your screen or logging back out and then logging in again to the webinar. Sometimes that'll fix those audio issues that you might have. So welcome, excited to have everyone here. First webinar I think that we've done together. For those of you who are new, welcome, welcome. Existing clients, so glad to be able to talk to you in this forum. If you don't know me, my name is Rhonda Saucedo. I am an enrolled agent with the IRS. Basically means that I'm approved to represent and perform certain activities before the IRS. I've done accounting for a number of years, and these are some ways to get in contact with me through my email or through this appointment link through Bitly. For this webinar, I have a special appointment link that I've set up. It's a Bitly strategic webinar appointment, separate from my normal appointment link. So just you might want to make note of that if that's not something that you've seen before. Here are some other ways to stay connected with me through my website, strategictaxes.com. Two email addresses, the RS, those are my initials, strategictaxes@gmail, and then info@strategictaxes.com. There's also my regular appointment link through Bitly. If you've never done a Bitly link before, just remember there's no need to type in the www before it. You just have to type in bit.ly and then the unique link on the end for that. Also, a new thing that we've started recently is our email newsletter. If you're not getting the newsletter and you want to get our newsletter, definitely use the link Strategic News, and we'll go ahead and get that email newsletter out to you. It comes out once a month, and then mid-month there's kind of a little update on anything that's happening. And yeah, it's just a fun little thing, kind of keep you up to date on what's new in taxes and just some tips throughout the year to kind of help you out with that. Not going to inundate you with a bunch of messages. Like I said, it comes out at the beginning of the month. There's one more in the middle, and that's kind of it. Unless there's something special like a webinar, and then I might send another. Also, social media. It's a good way also to kind of see what's going on in IRS news, with anything different that's coming out. If there are some deadlines upcoming, I try to keep all those in the social media links. So on Facebook and Instagram, it's just strategic. Actually, Facebook and LinkedIn, it's Strategic Taxes, and then on Facebook, it's Strategic Taxes CA. So hopefully I said that right. Instagram and LinkedIn are Strategic Taxes. Facebook is Strategic Taxes CA. Okay. Services. So these are some of the services that I provide. I do tax preparation, business, individual, and recently just added some cryptocurrency. There's a lot of training this year in cryptocurrency. If you have any Bitcoin or anything like that that you've acquired, there's a lot of new legislation on that and the reporting of that. So definitely give me a call or set up an appointment so we can talk about that. Another new thing that I've spent some time doing a lot of training on is tax resolution this year. So for people who might have large tax debts, or who might have a lien or levy or need to get an installment agreement if they owe over $10,000, that's something I can definitely help you with. So let me know if you have friends and family if that's something that they might need help with. I'm really excited about this aspect this year, adding that in, because I know that this is something that's going to eventually become an issue because the IRS is investing so much money into adding new auditors and creating more audits because it's more revenue. So that's definitely something that I'm happy to be able to help out with. Hopefully it's not a problem. Definitely don't want that to be a problem for anyone, but trying to make sure that if it does become an issue, that that's something that we can handle together and make the best solution for you. Also business formation. If you have a regular C Corp and you want to convert it to a partnership, an LLC or an S Corp, that's something that's worth talking about, especially if you owe a lot of tax on your, I think I said C Corp, but I meant sole proprietorship, so Schedule C. So if you owe a lot of taxes on that, that might be something where talking about your business structure might be something you want to consider in this upcoming year. Bookkeeping is also something that I'm offering, have always offered. I do different levels. I do full bookkeeping if you want to just keep track of your books. I do kind of a quarterly review if you're already keeping your own books to make sure that you're doing everything you need to be doing, capturing all those deductions. And then if you're also doing your own books and you need some help with that year-end closing aspect of it, that's something I can help with as well. And two new things that I'm adding in this year is an audit detect feature. So I partnered with a company that has been able to help people detect whether there's something on their return that might trigger an IRS audit. So what's really cool about that is by doing this audit detect program, we can look at your past 3 years, look for any potential flags for the IRS, catch them, correct them, up to 18 months before you might even ever receive a notice. Like, think about that. 18 months before you can even receive a notice. We can get this resolved with the IRS, saving you so much time, money, crazy. So anyway, that's something that's going to be new this year. I'm really excited about being able to offer that. If you're a current client, you'll see that coming out when I send out the year-end items to get ready for the tax prep this year. If you have family members that aren't even clients and they're content with their regular repair, totally fine. We can add in the audit detect separate from what they're doing with that. You don't necessarily have to be a client of mine to take advantage of this auto detect feature, but I am like so excited about it, and I think that this is going to help a lot of people, just to put you just in a better position. You know, the more informed you are, the better it is. And the last part is audit protect. The same thing. If you receive any sort of notice or in a potential audit, I'm adding in an auto protect feature. And we've done something like this in the past, but enhancing kind of the features of it this year, so that there's different levels. Hopefully some of these levels of it might be a better fit for you than it has been in the past. And basically just kind of providing you with sort of an insurance type program, so that if you do receive these, instead of having to pay my hourly rate or paying some other preparer their hourly rate for doing some either audit work or notice work for you, you would just, whatever your audit protect plan is, it will protect you up to a certain amount of hours. So I think, you know, it's a really cool feature, and happy to be able to add that as well. So let's get into it. We're going to start by looking at 3 different areas of individual tax. We're going to talk about some end of year steps you can do. I know we're close to the end of December, but there's a few things you kind of just need to make sure you've taken care of before this year ends. And then some things you can do in January that you kind of want to, January, February, kind of get out the gate strong. And then some things to kind of prepare for and think about as you go through the rest of 2020. I can't believe it's 2020. It's crazy. Tax day, right? This is kind of how most people feel. Tax time is stressful, but hopefully after this webinar, we can help alleviate some of that stress. So here are some tips to complete by the end of the year. You want to max out your retirement. If you have, here are scenarios where you might want to think about doing this before year end. If you're receiving a bonus or have received a bonus, that's going to be extra income. So maxing out those retirement plans can help lower those taxes on that if you didn't have enough help from that. Look at your W-2. That's another thing you want to think about before year end. Your W-2 from 2018 compared to your last month pay stub, maybe the most recent one you have. Look at the withholding on the 2 of those. So if your withholding from your W-2 from last year is more than what you've withheld so far according to your pay stub this year, this might be a good plan for you, is to think about maxing out that 401k or either opening an IRA. If you owe taxes in 2018, also want to think about whether you've made changes this year to fix that. If not, this is a good way to catch up. So if you have a 401k, your maximum is $19,000, but if you're over 50, you can max out at $25,000. If you want to open an IRA, that max on a traditional IRA would be $6,000, and if you're over 50, you get another additional $1,000 on that. Want to be sure your HSA is paid out. So any money that you've received for a health savings account for the year, you want to be sure that you've spent that money, because you receive that money into that health savings account tax-free. So if you don't use that benefit, then you're taxed on it come tax time. So use that money. It rolls over, and I've been asked about the fact that it does roll over. Yes, it does roll over, but you will be taxed because you receive the tax benefit to have that money set aside for you to use in the current year. So if you don't use the full amount of what you've had set aside for the year, then you will be taxed on at tax time. So kind of take a look at that. That's something that I see a lot that people don't do, is use that HSA money. And I see that as tax that they're having to pay on their tax return. Charitable donations. Good way to help someone out and at the same time save a little money on your taxes. There's also a charitable donation bunching you can do. It's through an investment plan. So that's something that if you think you know you want to contribute, but you're not sure you know who or what you want to contribute to, then you can do those charitable donations through an investment plan, through a financial advisor. And if that's something you want to talk more about, that's something we can do on the side. And last, kind of go together, these last two, capital gains. If you've had some capital gains, there's right now an investment qualified opportunity fund that was started with the Tax Cuts and Jobs Act. So you can roll those capital gains into that qualified fund, and up and through until the end of the year, you can have that money sit in that fund and not have to pay any capital gains on that. I think the only thing is that you have to have it in there for 7 years, and then those capital gains are tax-free to you, which is nice if you have a large capital gain. The other thing you can do if you just have some capital gains and not so large is if you have some worthless stock or some other losses, capital losses that you have, you might want to go ahead, we call it harvesting, go ahead and harvest those losses. Use some of those losses to offset your gain in the current year, so that way you're not having to pay those extra taxes on that. So once the new year starts, you still have some time to contribute to your IRA. Have until April 15th to receive that deduction. Again, you want to check those withholdings. This is a good time to kind of get that reset at the beginning of the year. If you're not withholding enough, if you think you're going to be paying, kind of just get off to a good start in 2020. We do a calculation to see if you're withholding too much or too little, so that's something we can talk about as well. If you're withholding too little, I'm not always a fan of just giving your money away to the government. We can recommend some different options for you, like increasing your HSA, some different retirement plan options. I just think it's better to give the money to yourself than to give to the government. So we can just kind of talk about some of those options as well. And then definitely, this is a good time to start thinking about your tax plan. Think about what this year is going to hold for you. If you're thinking about starting a family, if you're going to start a business, if you've been owing money year after year, then we really need to sit down and create a tax plan for you. And that's something I've been working on a lot, is just kind of getting some good strategies in place for coming up with a really good tax plan for everyone. Let's see. During the year, we talked about this a little bit already. If you're thinking about making some life changes, this is the time to kind of start planning for those. What are your financial goals? Are you thinking about buying a house, starting a business? You want to lower your taxes? Did you start a new job? Did you have a baby? These are the times that you kind of need to readjust what you've been doing tax-wise, and come up with a solid plan for that. So definitely let's sit down and talk about that. We want to make sure that we're really kind of digging into making a solid plan for all these different life changes that come up. Next, let's go into some business tax planning ideas, some tips here. We're going to look at a similar thing. We're going to look at the end of the year things we can do, look at some beginning of the year tax tips, things we can do, and then ultimately what to do throughout the course of the year. So if you're a business owner, deductions, that's always the plan. Like, everything in your mind is, can I deduct it? What can I deduct? We gotta get those deductions, right? That's the plan. I saw this picture and it made me laugh. It kind of sums up the whole business owner mindset right here. Okay, so before the year end, If you're thinking about making some purchases for some equipment or some other things for your business, and you've put it off, this might be a good time to do it. But you want to make sure you do this in a year that makes sense for you. If this has been kind of a down year for you business-wise, then maybe don't make those purchases before the year end. Maybe it's something you want to wait to do next year. If you're seeing that your income is going to pick up next year, then hold on to those valuable deductions until you really need them. If you are a business owner as well, and you have employees, another way that you could create some deductions is bonuses for those employees at the year end. Have some great employees, it'd be a wonderful way to reward them, and also you get a great deduction as well for that. So it's kind of a win-win on both sides. If you own rental, same principle applies. Make your repairs, replace your worn out items, water heaters, appliances, those kind of things. Do those before year end. If you have a lot of rental income and you haven't had very many deductions, but again, like we talked about before, this was kind of a down year for you. Hold off on making those purchases. Save those deductions for when you really need them. So while we've talked about these all important deductions, there's two important things we need to keep in mind. We need to track them so that we don't miss any, and we need to keep good records in case we're audited. So good bookkeeping, no matter what your business is a must. You have to have really good books. You have to make sure that they're accurate, that you've reconciled everything you need to reconcile. And as year end approaches, having those books reviewed. They need to be reviewed during the year, and make sure you make all those important closing entries for the end of the year. It's important to clean up any errors you may make to be sure that you're categorizing everything properly. If you need help, definitely reach out to me. I'd love to help you with this. If you have a contractor that you've used throughout the year and you plan to send them a 1099, be sure you've received their completed W-9. That will give you their address and their tax ID. You cannot do a 1099 without the tax ID. And it's kind of hard once it comes tax time to get those contractors to give up that information. So a good rule, if you haven't really done a good job of this up till now, is before you send those payments out to those contractors, make sure that they complete that W-9. And if you need that link, just reach out to me. I can give you the link to have them complete that form for you. You just keep it. It's not something you turn in. It's for your record so that you can complete an accurate 1099 for them in year end. You also want to make sure your payroll is in order, that your taxes for your payroll have been filed for the whole year. The last payroll tax pay date is coming up January 15th. So make sure that all that's kind of in the right order. And then last, max out your self-employment retirement accounts. If you don't have one set up, start now. Put that at the top of your 2020 list. You have to pay yourself. If you're a business owner, you have to take care of yourself. So I hear a lot of people say, I can't afford to pay myself. I can't afford to do this. You can't afford not to. You can't afford not to pay yourself and to plan for your retirement and your future. So again, this is something that if you need help with, let me know. I know a good online company that it's good. You can kind of manage it on your own if you want, and I can help you with that if need be. But definitely pay yourself. So the start of the year, January, February, that's really a good time to think about your business structure. Are you in the right structure? So we have, there's a business structure calculator that I kind of created recently that I'm using. And so with that, I'm able to help you see if, based on the income you made, if you change to a different structure, what would your tax situation look like? Does it make sense for you tax-wise? Does it make sense for you in getting that QBI deduction that was created with the Tax Cuts and Jobs Act? I mean, how does that make sense for you? So we can sit down, we can use that calculator that I have and just see if your structure is right or if moving to a different one would be a better fit. And deductions, they're king. So what are your goals? This is a good time to decide what those goals are. Plan accordingly. Do you want to hire an employee, open a new office? Are there some deductions you may not be taking, like hiring family or renting back to your business? Those are all things that are part of tax planning, and we can talk about if any of these different structures or different tax planning options may work for you and create a plan that's good for you. S Corps, they're a favorite among business owners because of their tax treatment, and the Tax Cuts and Jobs Act made them even more favorable. But as they're a corporation, there's some really important steps to being compliant. Like I just mentioned, Tax Cuts and Jobs Act made this an even better option for a lot of people. But because of that, now there's more scrutiny on this type of structure, more than there has been in years past, as recent as even 3-4 years ago. So you want to make sure you're doing all the things you need to be doing to be compliant. So one thing is your minutes. Have you done your minutes? So minutes are important because in the event that you're audit, then you can verify your stance on certain issues regarding your corporation, such as how you're paying your employees, how you're paying your shareholders. That's a big thing that the IRS is really focusing on right now, is the compensation to shareholders. So that's an important thing to kind of keep in mind with your payroll. It's required that shareholders be paid a reasonable wage. And like I said, the IRS is really, really cracking down on this. I've had a lot of colleagues have issues with this year. So if you are a corporation and you participate in the business and you aren't paying a wage, that's something that has to start today. I can't stress that enough. If you're not paying a wage and you are an S corporation owner, we need to talk. We have to get that fixed. So like I said, there's been a spike in the audits for this. There's been a lot of talk about this reasonable compensation, and that's something that I'd love to sit down and talk to you about, because these penalties, if you don't have payroll, can range into the 100K range. It's insane. It's a lot of money. And this is like the #1 IRS money maker right now, is this reasonable compensation. So this has to be your priority if you're an S Corp. In the minutes we talked about, to talk about your compensation amounts for your shareholders, their participation in the business, and how you devise your reasonable compensation. So because this is such an important issue, I've partnered on this as well with another company, a colleague of mine, and they're one of the leading companies in creating reasonable compensation reports and the guidelines for what businesses should be providing for their shareholder or employees. And so what they've done is they've had numerous meetings with the IRS in figuring out kind of their guidelines for what reasonable compensation should be. And in their reports, they're reflective of the conversations they've had with the IRS and other cases that have come up recently, to come up with a concise, reasonable compensation amount for you to figure out what it is that you should be paying within your business to each employee. So I'm super excited about this, being able to give you a report that you can mention in your minutes and have with those minutes to substantiate the amount of money that you are paying to yourself and to your employees that are shareholders. Because I just don't want this to be a problem. Like I say, the penalties on this are just, they're insane. It's just crazy. And best to just handle this now, do it the right way, and be paying the right amount. You could be paying not enough, you could be paying too much. So if we can get that report done for you and figure out where that compensation lies, and if in the event that the IRS comes back to you and they want verification, you have it. You have it in your minutes and you have it through this report. So this is super important. Really, really, I just can't stress that enough, that we can't kind of ignore this like we've done in the past. Have to talk about reasonable compensation and paying ourselves. So again, if you have any questions about that, definitely reach out to me. And as we talked about before, retirement planning and tax benefits, they're definitely a plus, but again, should definitely be paying ourselves and taking care of ourselves in our business. We work so hard for this business, we got to have a good plan for taking care of ourselves after it. And our tax plan, again, got to work out that tax plan and figure out where we want, where you want to go with your business, how long you're planning to be in business, and just coming up with a plan for your day-to-day. So definitely want to sit down and talk about that, if that's something you're interested in. So during the year, keep in mind that the other tips that we've gone over, but also, again, major changes, it might be a good time to kind of check in at any point if you have any of these items we've mentioned here. Keeping good records, definitely key. Getting those records tuned up either during the year or at the end of the year. Got to make sure those records are accurate. Okay, before we finish up, let's talk about a few main takeaways and some tax planning. First of all, it's a lot of information we've talked about. Please don't feel overwhelmed. I know we covered a lot, but email me, set up an appointment to go over any of these issues, and take advantage of the content that we're providing on the social media pages, Instagram, Facebook, LinkedIn, and in our newsletter. Again, you can access that newsletter through the bit.ly strategic news. Think about taxes as a year-round issue. A lot of people, it's not until this time of year that I think about, well, what am I going to do about my taxes? Am I going to owe? Am I getting a refund? This is something that we could be talking about throughout the year. We should be talking about this throughout the year. As your income increases or it decreases, we got to figure out what steps should you take. What are the tax implications of those steps? It should always be something that's prominent in your mind. If you're an S Corp, start your payroll yesterday, not today, not tomorrow, yesterday. It's definitely a priority. And the tax consequences are just too dire to ignore this anymore. And ultimately, just remember, I'm here to help. That's what I'm here for. Reach out to me, stay connected. I'm trying to be as available and help you kind of get through what can be a stressful time of year as easily as possible. So reach out at any time. Tax planning. Let's create a tax plan report. What I've done also, been partnering this year, a lot of stuff going on behind the scenes with different companies on just kind of creating a better service for you. So there's a tax report that I'm able to create through another company that I'm partnering with, where we can, through an online access or a report that I can send to you, access your tax situation at any point during the year. So we'd input your current income, we're going to input your current tax return, and through that come up with a plan to drop your taxes potentially all the way to zero if you implement all the different options that I'm going to provide through this report that I can give to you. And it's really great because I think the question a lot of people have, there's such a mystery around taxes and taxation, and to get to the end of the year and then you just kind of get that surprise of, oh, I owe money or I don't owe money. To be able to have that information throughout the year, just kind of see where you're at on track, I think is invaluable. And for me, that's something that I try to do, on a personal level, just kind of keep track of where we are as a family as far as our taxes. So to be able to provide that for you, that peace of mind, knowing, okay, well, if I contribute this much to my 401k, this is how much is going to drop my taxes. If I contribute to my HSA, this is how I can drop my taxes. If I'm a business owner and I buy this equipment, or I set up this retirement plan, or I pay this much to my employees, what is my tax situation look like at the end of the year? I think that's gold. So if that's something that you think you want more information about, or you want to talk about having this report generated to you at the interval that feels convenient to you, let's definitely talk about it. Let's reduce the stress around taxes and the mystery that's surrounding it. So I want to thank you so much for tuning in today, taking time out of your day. I hope you found this informational and informative. My goal this year is just to give you as much information as you need to be able to make educated, informed decisions. I want you to feel empowered by the knowledge that you're receiving. I want you to have all the knowledge you need about what's going on with the IRS and your taxes and running your business, and to be able to use that knowledge and to feel confident about your financial planning in the future. And we can do this together, carefully, practically, and strategically. We can do this. So please visit my website, email me, or use this bit.ly link that we have on the screen right now, bit.ly strategic webinar appointment. If anything that I've talked about today, you have questions about, use any of these avenues to reach out to me. If you need some further information on any of the tax planning tips that I've brought up to you today, reach out to me definitely. So that's about it. Again, I appreciate your time. So happy that you tuned in today. And if there's anything, as always, I'm here, I'm available. Okay? Thank you.